Everyone, and welcome to this month's last day of the month's Daily Five. I am your host, Mish Schneider, aka Mish. And once again, I'd like to thank StockCharts TV for giving me this platform each month. So I think what's extremely timely, given all of the different aspects we have influencing the market, the bounce off of the recent lows, the fact that we have some real risk off indicators, the Russia-Ukraine, the Fed policies, and everything, and a real shift actually in overall sentiment with kind of a stagflation environment going on right here. Classic is we really have to say, without these sectors, there should be an S there, caveat Emptor. So what I'd like to do now is, before everybody gets sucked in thinking that this is the bottom and the market is just going to continue to power to new highs, let's go through the different sectors and what they have to do in order to keep this market afloat, or this could just be what they call the dead cat bounce. Okay, so let's start with the Russell 2000. What we do know about the Russell 2000 is that this is really where you see the evidence most of the whole idea of a stagnating economy, because the industrials and the manufacturing sectors of the economy have definitely shrunk over the last couple of months. And also, IWM sort of had a clue before the rest of the market that things weren't necessarily as roseate as one would think going into the end of 2021, as we peaked, started to move down, really started by the end of November, just when Black Friday was rolling around, to break down under the 50, then to break down under the 200. One little pop sort of optimistically as we started January, and of course here we are. This has fallen a lot, not quite 40% from the highs, but definitely getting close to that particular level. And so really, essentially what we can say is, at this point, we're having a classic mean reversion type bounce where we've crossed over down here, if you follow my cursor, over the Bollinger Band on the real motion indicator. And the green line being the Bollinger Band on the price, where we broke it on Friday, came back and is now above it on the price here in the Bollinger Band on the Monday, as I'm speaking to you, January 31st. Now, what's interesting about this is we always say that if this is the first one to show a top, sometimes, not always, it's the first one to show a bottom. So that's the real question here. Is this a bottom? To me, well, as we go through evidence of other things, we're not sure yet. If I had to guess, I would say probably not. But nonetheless, we do have this point here at 188 that held. And now here we are trying to head back over 200. But if you look up at the Russells from where it really broke down from, it was really at about 204, 205, or the February 2021 low, that really sent this thing lower, considering we had been in that range all this time until more recently. So perhaps if we can get back through there, things really will look a lot better. And regardless, whatever policies are out there, you have to forget about that and just follow price, and we can say the worst is over. However, if we can't even get back through 200 or 202, 204, and we start turning lower, we could just test this low again. Or if we break this low, going back to the last time we had a stagflationary environment, we fell 40% from the high. 40% from here is another $100 from the peak, so at around 143. That would really get nasty for the overall market, but at that point probably find the ultimate floor. So right here, very, very confusing about how much you should engage in the longs or even in the shorts. Now, granny retail, another super important area, and the reason is because this is the consumer aspect. This is where we are also seeing this stagnating economy, consumer confidence down, and retail sales are down. However, we did have this nice bounce from the low the other day. We didn't quite reverse from it. It was a mean reversion trade, but we haven't really gone too far. So this is also very key. 75 is going to be a good area to hold if this is truly trying to bottom, but it's got to get through 85 to prove to us that it can get back through the thick of all this work it did, again, for almost fully a year. And of course, you can see that the leadership against the SPY is down, even though the momentum is trying. This is certainly, again, not out of the woods with a lot of retail stocks yet to report. The next one, of course, is probably maybe the most important, and that's transportation, because if we're going to see any growth in the economy, it's going to have to come from the infrastructure package. So right now, again, we kind of reached sort of a little bit of a temporary bottom. No kind of real mean reversion here, a slight on the momentum here on the real motion. But again, we have a declining 50-day moving average. We have a neutral to slightly declining 200. Looks like we could be heading for a death cross. And even though we're getting a bounce, unless this thing really can get back through 262 and really 270 or back through all these moving averages, right now, this does look like we got some buying here against this level of support, but how robust it is remains to be seen, and it could very easily roll itself over. The next one is semiconductors. And of course, that's been the classic growth stock leader for a long time, for years now. And that is bouncing as well after almost a mean reversion on momentum, not quite, but definitely on price. Here we are testing the 200-day moving average that it broke down from. But you got a sloping decline here on the 50 overhead. And the good news is, of course, is we held classic support at around 245, 240. But if we break down under this 250, 245 level, then I think this too can have a pretty nasty move lower. Maybe we could see really a move all the way back down to around here. I know this sounds really terrible, but this is what stagflation looks like, is you get that dump and then you get range bound trading until everything shifts again. Now, of course, we have to be optimistic as well. And if this can get back over 275, we'll see. Maybe at that point, we'll reassess when it gets back up to 300. Next one is the regional banks. You know, I like to look at that more than the big banks. And of course, even with the Fed most likely raising the rates, this is now underperforming the SPY, interestingly. The momentum has gone down along with the price, but it's holding the 200-day moving average. And it's been very choppy for a long time until you had this one spectacular move up, which was really the idea when the Fed said that they were going to come back and reduce the balance sheet to zero or stop the bond buying. Now, reality has set in that may not be very much in terms of preventing a stagflation environment. And even though rates and banks usually go hand in hand, if this breaks down under 68, this will also fall. We'll have to look at 60. And again, I wouldn't get too excited about this unless it took out 75. So we're really smack dab in the middle. Now, the one sector of the economic modern family that has already cracked has been the biotechnology. And so, you know, Moderna was one that was really holding this up during the whole COVID part. But since then, we've gone nothing but down. We've had our death cross here. You can see that we had a mean reversion trade. Well, actually price, it wasn't clean because the price happened before the momentum. Momentum is happening now. But nonetheless, if this can hold up at these lows that we made on Friday at 122.50 and get a close, let's say over 130, 130.50, it's possible as a non-cyclical area, meaning it's stuff that people need and not what people want. We could see, as I've talked about in past videos, medical devices, etc. We could see this area actually begin to outperform. That would be interesting. And the last one of the modern family, of course, is Bitcoin, crypto. So let's take a look at crypto. In the Bitcoin chart, this too looks like it's trying so hard to get back, but it's not going anywhere. And so, as we can see here, we kind of went down. Everybody thought this thing was going down to 13,000. We came back. Momentum is not great. But if we can get back through 40, maybe that could get us back up to 43. Really has to be a move over 45 before we get too excited about this. Otherwise, if this thing cannot really hold this rally here and starts to break back down under, say, 34, then it's possible we'll at least be testing that 29,000. We are looking for a decoupling at some point, but clearly it hasn't happened yet. And finally, let's take a look at junk bonds, because junk bonds are the ultimate risk off. This is where bond traders go when they think we're in a good environment. Obviously, we can see that's not the case now, heading towards a death cross. Inside day, as I'm talking to you, and red, while the indices, except for the Dow, are green. This is probably your biggest warning right here. We break down under these lows from Friday at 104.73. I would expect easily a move down to around 103.50, but that also will put pressure on the market. Okay, that's it for now. Thanks so much for watching. Hope this was helpful to you. Take it easy and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.